Hi, my name is Ravi. Welcome to my channel Payment Talks. In this week, we try to extend our understanding of correspondent banking. In this video, we will understand the accounting relationship of correspondent banks and how these accounts are used to settle cross border payments. Do you remember these correspondent banking scenarios? Scenario 1 and Scenario 2. Please watch the previous video before continuing this video to understand the concept more clearly. We have Bank A in India, which has correspondent banking relationship with Bank B. In our example, Bank B is the correspondent bank and Bank A is the respondent bank. Bank A opens an account in USD with Bank B in USA. This single physical account can be termed as Vostro or Nostro or Loro and to an extent Mirror Nostro. Let us understand how. Bank B holds these accounts in their books of accounts. Let us say the account number is ABCD1234. In this account, actual money in USD will be available which belongs to the Bank A. To give an analogy, we hold our money in our accounts in banks. We are the account owner and bank is the account servicer. Similarly, here Bank B is the account servicer and Bank A is the account owner. From Bank B's perspective, this account is called as Vostro account. The term Vostro means yours in Latin. Here Bank B says your account to Bank A. The account number referred is ABCD1234. Vostro account is held in domestic currency. In this case, domestic currency of Bank B is USD in USA. From Bank A's perspective, this account is called as Nostro account. The term Nostro means ours in Latin. Here, Bank A says our account to Bank B. Nostro account is held in foreign currency. In this case, foreign currency of Bank A is USD from India. Please note, it is the same account ABCD 1234 that is referred here. Let us assume a third bank C. To utilize the Nostro account of Bank A to serve its customers, from C's perspective, this account is called as Loro account. The term Loro means theirs in Latin. Here Bank C says their account of Bank A with Bank B. In this case, it is just a reference from Bank C to indicate for communication and reporting purpose only. Again, it is the same account ABCD1234 that is referred. Since Bank A owns the account, it would be interested to know how much money its account contains at any given point of time. Since it is a bank which does hundreds of transactions with millions in amount that gets debited and credited in a day, it would be simply impractical for Bank A to open its net banking or walk into a branch to understand the current balance in its account. To track and monitor its transactions in the Nostro account, Bank A opens an internal account called Mirror Nostro account. As the term suggests, it is a mirror account that mimics the transactions in the original Nostro account. As the word suggests, the accounting entries in this account as mirror. That is a debit in original Nostro account is a credit in Mirror Nostro account and vice versa. This is a virtual account that has no real money. In Bank A, they might refer to this account according to their book of accounts. Let us say in Bank A's books, this account is called PQRS 5678. This account number is internal to Bank A and anyone outside of Bank A would not understand this number. Still, This refers to the original Nostro account ABCD1234 only. The currency of the mirror Nostro account will be same as original Nostro account. In this case, USD. With this new understanding of the correspondent banking accounts, let us look at practical examples on how these accounts are used to clear and settle the cross-border transactions. Bank A in India has a customer A who wants to send money to customer B in USA. Customer B holds a domestic USD account with Bank B. Customer A holds a domestic INR account with Bank A. Step 1. Customer A initiates a payment to customer B via any of the bank channels. To send money, customer A can choose to send either in INR as he holds the INR account with Bank A, or in USD as the final beneficiary customer B holds USD account with Bank B. We will understand the differences of both options in detail in our future videos. For now, we take the example where customer A wants to send USD 1000 to customer B. Step 2. Bank A processes this payment internally and then sends the payment instruction to Bank B via SWIFT network. Step 3. Bank B processes the payment and credits the account of customer B. Bank B sends an account statement intraday or end of day to Bank A. Bank A then reconciles this actual statement against the mirror account details. If there are any discrepancies, then Bank A and Bank B try to resolve. This process is called investigations. We will cover this topic in a separate video later. Note: debit credit notification or a statement will only be sent by the account servicing institution for a physical account that is in its books. For Nostro account, we do not generate the debit credit notification or statements. Let us look at each step in detail along with accounting entries. Payment initiation. Customer A can initiate the transaction via his or her internet banking or any other available bank channels. If it is a large corporate customer, they can also use SWIFT network to initiate a cross-border payment via PayNo1 or any of its equivalent message. In this scenario, customer A initiates 1000 USD, that is instructed amount and currency, to be processed to customer B. Let us take the exchange rate to be 1 USD equal to 80 INR for simple calculations. Payment processing at Bank A. Bank A, after receiving the payment request from customer A, does internal evaluation of the payment. There are many validations and evaluations that a bank does. We are focusing only on the payment funds and its settlement. Bank A, based on the payment instruction, debits the customer A's account in INR to the tune of 80,000 at an exchange rate of 1 USD equal to 80 INR. This amount should be converted to USD before sending an instruction to Bank B for further process. So, Bank A credits this 80,000 INR into its internal FX suspense account. Bank A then does money market transactions to convert this INR into USD. We will look at the FX conversions and calculations in later videos. This concept is mainly for Treasury Department in the bank. Bank A holds a USD account with Bank B. Bank A sends instruction Paxo 8 via SWIFT network to Bank B and informs Bank B to take funds from its Nostro account ABCD1234 to give it to beneficiary customer B. But to track this payment, Bank A does a second accounting entry in its books. Please note the point that the payment instruction sent to Bank B has the information about the account ABCD1234, whereas the internal accounting entry made by Bank A is on the account PQRS 5678 and the accounting entry is credit of 1000 USD. Settlement of funds moved from customer A to Bank A. Payment processing at Bank B. Having received the payment instruction from Bank A, Bank B validates and evaluates the payment instruction. After successful validations based on the instruction, Bank B debits the Vostro account ABCD1234 of Bank A to the tune of 1000 USD and credits this amount to the customer B's account. Please note that the debit entry in account ABCD1234 at Bank B reflects the mirror entry, that is credit entry in account PQRS 5678 at Bank A. This is how Bank A reconciles the payment entries. Bank B informs customer B about the credit in its account. This information can be reported to customer B via any of the bank's mode of communication like mobile SMS, email, etc. If it is a large corporate customer, Bank B can inform them via Swift network using CAMT54 or CAMT53 or any of its equivalent message. Bank B sends a reconciliation report to Bank A based on the agreement between them. CAMT53 or equivalent messages can be used. Settlement of funds. Funds moved from Bank A's USD account to customer B via Bank B. In this way, the funds in a cross-border payment from customer A in India are sent to customer B in USA using correspondent bank relationships and their special accounts. Extending the understanding of the concept with a more practical and common scenario. In previous example, both sender and receiver banks have correspondent relationship. But in practice, payments can be made by customers of banks that are not connected but by using intermediary banks. Bank C in India has a customer C who wants to send money to customer D in USA. Customer D holds a domestic USD account with Bank D. Customer C holds a domestic INR account with Bank C. Here, Bank C is in India, does not have any USA correspondent. It utilizes the correspondent relationship of Bank A and Bank B. Step 1. Customer C initiates a payment to customer D via any of the bank channels. Customer C initiates a payment in USD for the amount 2000. Bank C processes the payment via Bank A, its local correspondent for USD. Since both the banks are in India, Bank C sends the funds to Bank A via domestic clearing. We will understand the local clearing and settlement process in detail in our next video. Step 3. Having received the funds and payment instruction from Bank C via clearing, Bank A then processes a payment instruction to Bank B to further process the funds to customer D. Step 4. Bank B understands that the customer C's account is with Bank D in USA from a Bank A's payment instruction. It debits the Bank A's Vostro account and transfer the funds to Bank D via the local clearing. Step 5. Having received the funds and payment instruction from Bank B via clearing, the Bank D credits the account of customer D and informs the customer about the credit. Let us look at the processing done at each bank along with the accounting entries. Processing at Bank C, the first bank in chain. Customer C initiates the transaction to Bank C via any of the bank channels or via PayNo1 through network. Let us assume the instructed amount to be 2000 USD. Bank C, based on the payment instruction, debits the customer C's account in INR to the tune of 1,60,000 at an exchange rate of 1 USD equal to 80 INR. As Bank C uses Bank A as local correspondent for its USD payment, Bank C needs to transfer this amount to Bank A. As Bank A and C are located in same geography and are connected to domestic clearing, Bank C sends the payment instruction PAX 08 or equivalent local clearing format to Bank A via local clearing. On successful acknowledgement from clearing, the funds are transferred to Bank A via local clearing. We shall look in detail about the domestic clearing and settlement process in our next videos. Settlement of funds. Funds moved from customer C to bank A through bank C via local clearing route. Processing at bank A, the first intermediary bank in chain or local correspondent of bank C for USD. Having received the payment instruction and funds from bank C via local clearing, bank A then processes the payment. As explained in the previous example, Bank A identifies the payment as cross-border payment in USD, takes the funds from Bank C via local clearing in INR and parks them in the FX suspense account. Does the money market conversion to USD. Using this conversion, Bank A then initiates a payment transaction Paxo 8 to Bank B, instructing to take the amount from its Nostro account and settle the funds to customer D holding an account with Bank D in USA. For this, Bank A does second accounting entry in USD and does a credit to Nostro Mirror account PQRS 5678 for tracking. Settlement of funds. Funds moved from Bank C to Bank A in INR and an instruction went to Bank B to move funds in USD. Processing at Bank B, the second intermediary bank in chain or correspondent of Bank A for USD. Having received the payment instruction from Bank A, Bank B validates and evaluates the payment instruction. Bank B debits the Vostro account ABCD1234 of Bank A in USD. Based on the payment instruction, Bank B needs to transfer funds to Bank D in USD. Since Bank B and Bank D are located in the same geography and are connected to the domestic clearing system, Bank B initiates a payment instruction Paxo 8 or local clearing format to Bank D via local clearing. Settlement of funds. Funds are transferred from Bank A's USD account to Bank D via local clearing. Processing at Bank D. Beneficiary customer D's bank. Having received payment instruction and funds from Bank B via local clearing, Bank D validates and executes the payment instruction. Bank D credits the 2000 USD into customer D's account. It will report this credit to customer D via mobile, SMS, email, or any other mode of communication. In this way, Bank C in India could transfer the funds in a cross border payment to Bank D in USA with whom it does not have any relationship, but by using the intermediary banks A and B and their corresponding relationship using special accounts like Vostro, Nostro, Mirror Nostro. Thanks for watching this video. If you like this video, please like, subscribe and share for more such interesting topics on payments.